Yesterday, the US dollar started losing value quite unexpectedly. The decline could be explained by a too emotional reaction of traders. The fact is that at the weekend, Joe Biden said that the debt ceiling voting would take place on May 30. However, there were some details. Yesterday, the U.S. House Committee voted to advance the debt ceiling bill. Today, the House of Representatives will vote on this issue. In the case of a success, the voting will take place in the Senate on June 2nd. Notably, Janet Yellen has warned that the U.S. government will have money to pay all of its bills only until June 5th. What's more, some representatives of the Republican Party have already said that they will vote against this bill. In other words, the expectations failed to meet reality and the situation remained uncertain. In addition, mass media may continue discussing the aftermath of a possible default in the United States. Against this backdrop, the US dollar will hardly rise. Notably, the currency has no room to grow as it's extremely overbought. Meanwhile, the euro and the pound sterling are also falling after a confident rise. However, the current drop could be defined as a technical one. That's why both currencies may surge amid the US job openings report that may unwieldy decline. Such forecasts are quite gloomy, especially ahead of the US Labor Department report that is due on Friday. Any sign of the deterioration of the labor market situation leads to a slump in the national currency. On the trading chart, we see that the euro-dollar pair stopped rising and resumed losing value. As a result, the price once again slid below 1.07, and the market sentiment remains bearish. That's why the price settlement below 1.0700 may lead to the prolongation of the downward correction. And traders should keep in mind that the euro is oversold, which is confirmed by many technical tools. However, speculators are ignoring these signals, which points to the inertial movement. Such a decline may spur a rapid drop in the volume of short positions and a sharp price reversal. Meanwhile, the pound-dollar pair left the stagnation phase near the level of 1.2350 and started gaining in value. This is the first technical signal of a possible end of a two-day correctional cycle from the high of the midterm trend. To continue rising, the pound sterling should consolidate above 1.2450. In the event of this, we may see recovery after the recent correction. However, the downward correction may continue if the price settles below 1.2300, at least on the 4-hour chart. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.